Wall Street is holding its breath as Federal Reserve Chair Jerome Powell prepares to deliver what could be the most important speech of his career. At the annual Jackson Hole Economic Symposium, investors are anxiously waiting for his final address as Fed chair, hoping for a clear signal on the future of interest rates. Global markets have been trading cautiously, and the S&P 500 saw a modest gain today after 5 straight days of losses. The reason for the recent market jitters is simple. Traders fear that Powell will deliver a hawkish speech, which could dampen hopes for an imminent rate cut. The stakes couldn't be higher. For 9 months, the Fed has held its key interest rates steady, a decision that has put Powell at odds with President Trump, who has been publicly pressuring him to lower rates. This political backdrop only adds to the tension. But the Fed's dilemma goes beyond politics. The central bank is navigating a series of conflicting economic signals. On one hand, the job market is showing signs of cooling, with hiring slowing to just 73,000 jobs in July. This would typically be a green light for the Fed to consider a rate cut. On the other hand, core inflation recently accelerated to 3.1%, well above the Fed's 2% target, partly due to new tariffs. This suggests the Fed should keep rates higher to fight inflation. As one former Fed economist put it, the dilemma has intensified. Market expectations have already shifted. Just a few weeks ago, traders saw a near certain chance of a September rate cut. Now that probability has plummeted to below 80%. The message Powell delivers today could trigger significant market volatility. Analysts are warning of a potential stock market pullback if his tone is not as dovish as investors hope. All eyes are on Jackson Hole as the world awaits a decision that will shape the economy for months to come.